Hey everybody, welcome in. Thank you for the likes. Let's talk about today's story. It's Monday, wherever you are in the world. If you're in Australia, it could be very early Tuesday morning. And tomorrow, of course, is TA Tuesday. But let's jump in. Waste any more. And tomorrow, of course, is TA Tuesday. But let's jump in. We got volume. It's always good to check. So I'm not talking to myself, which happens about once in every 60 videos. So we're going to talk about mergers, L1s, a little bit of macro, what's in store in terms of data this week. We'll talk about fiat debasement again, what you can get in your checking account, a little bit on real estate, and a whole bunch more. So let's go. Big story. Well, we covered that already. Again, why Bitcoin is pumping, what's going to happen after the merge, a little bit about the merge, more about ETH killers, and also why maybe Bloomberg is watching my channel. We'll see. But first of all, good news. Market is kind of strong, at least the things we like. Bitcoin is up. Everything compared to Bitcoin is down. In fact, ETH compared to Bitcoin is down 5.5%. A lot of red all across the board. That means Bitcoin is pumping. Except Solana is pumping more. So is MATIC. So is wrapped Bitcoin, obviously. It's pegged, but that's kind of the market news. Now let's look at equities. A lot of people are waiting for that, 2,000 level on the S&P 500, but it keeps going up. Stock market keeps crushing it. You got Apple up 4%, Amazon 2%, Tesla up another $3 or $4, etc., etc. Lots and lots of green out there. So what does this all mean? We know we have a big week. We know tomorrow's a big day. What's going to happen after tomorrow? We'll talk about that later too. So first of all, let's talk about Bitcoin and post the Ethereum merge. Many believe Bitcoin will take the driver's seat from Ethereum. Ethereum was leading the way in the bear market, up 120% over the last 2.5 months. But there are many signs now that there will be a shift in which coin is leading the market. And per this volume chart, thank you to the team at CryptoQuant, 3 days ago, there was a crossover, which means that the Bitcoin started to be more dominant on exchanges in terms of trading volume. And this is a clear sign that perhaps, maybe, Bitcoin is taking over the driver's seat from Ethereum. So we'll watch this volume very carefully. Let's talk about Bitcoin price. Popped over 22K, and more buying is incoming. Why? Well, our dear friend Michael Saylor is going to issue some more stock. We touched on it briefly yesterday. Sell about 500 million in stock. MicroStrategy is the business intelligence technology firm, and they intend to, again, issue stock to buy more Bitcoin. He is chomping at the bit to get some of that cheap 20K Bitcoin, and he's like, knowing him, he's biting his nails, not sleeping in his eyes at night. It's like, when can we issue the stock? When can we get the cash so we can deploy fast? So when that happens, expect more upward movement. So again, those waiting for the $3,500 Bitcoin and the $12,000 Bitcoin, don't hold your breath. In other news as well, Fidelity, the $4 trillion shop, offers crypto trading. This is big news on top of all the BlackRock news we had. Fidelity is set to launch their Bitcoin trading for retail investors through its brokerage customers, according to many reports. And this firm already offers exchange-traded products geared towards crypto. They have some digital payments and some metaverse stuff going on there, but this is another domino. And a reminder, Fidelity have $4 trillion in assets under management. I'm not sure exactly what percentage is in those brokerage accounts, but this was leaked as well, apparently, by Galaxy Digital CEO Mike Novogratz, who whispered at a SOL conference on Monday that this is going to happen. Shift to retail customers. Looks like it is happening, and it's big. We knew it was going to happen. It's just a question of when. So September is not looking like the bloodbath that many expected. And I did say back in August, this time is different. But who knows? We're not out of the woods yet. In other news as well, in mid-August, the aggregated open interest across Ethereum options hit a new all-time high of about 8.5 billion. And the Ethereum futures spiked as well. I think the mid-August high is about 9.5 billion. But here we are. Now, overall, Ethereum derivatives market was on fire. Still is. Everybody's excited about the merge and placing their bets. And volumes for both options and futures were trending upwards since June. And that's part of what happens. That's why I spend a lot of time watching the options action, because that can tell you where the smart money is betting, and that will tell you where the money is going to go ultimately. Now, all of this is up to the merge. The merge is going to end pretty soon. We'll talk about that too. And we expect things to come back down to earth. In fact, the merge is only days away, and there is still a little bit of uncertainty out there as to how it'll turn out. Some investors are betting on the asset price. That'll go up. Some are betting it'll go down. Some think the blockchain will be viewed as bullish for Ethereum. And some people are having FOMO. But here we are, 2 days and about 9 hours, 10 hours left to go. So we'll see if it goes without a hiccup. I do expect maybe a couple of API failures with some different chains. Remember, it's a very complex ecosystem, but interesting one to track. Now, social interest in the merge is up. It's increasing. And this is moving counter to price. And this is a little chart from Sentiment. Thank you to the team over there too. And you can see that the social mentions related to the monumental event, one of the biggest events in crypto for a very long time, are very high on social platforms. But the price is not going in the same direction. Why is that? Well, there's some other stuff happening. Maybe, as I always say, people kind of front run stuff, buy the rumor, sell the news, etc. People don't want to hang out for the next 2 days, but they want to take profits where they can. Maybe that's why we see some of the downward pressure on Ethereum today, down a whopping 5.5% against Bitcoin. So other things that are stealing a little bit of the thunder is Solana NFTs had a huge last couple of days. Everywhere you go, there's articles about Solana NFTs leaving Ethereum in the dust. From Fortune magazine, Solana trading volume to the highest since May. Decrypt, Solana startup Dust Labs raises 7 million. Utes tops the NFT charts. Blockworks said latest Solana NFT collection gives Ethereum NFTs a run for their money. And CoinSpeaker, NFTs reached 312,000 all-time high after climbing 700% in 3 days. So a lot of NFT action happening on the Solana chain. And that adoption is, of course, good for the chain. But let's talk a little bit about the market reacting to all of this type of stuff. The big names we're looking at today, Bitcoin is up 2.6%, broke through that 21,750, which is a critical level of resistance. I believe the next stop is 24K. Solana up nearly 8%. It was up above $38 earlier today. Cardano down ever so slightly, 0.76%. And Ethereum down at 2.31%. So mixed reaction there. Things are going in different directions. But that's what always happens. That's why the swing trading between assets is so important. Now, Cardano news. Cardano has seen thank you, Green Candle, over a fivefold increase in the number of projects building on the network since 2022, since January 1st, 2022, I should say. And they currently have nearly 1,000 projects being built. The number of projects actually live on the network, I think, is more about 200, but I'm not sure on those numbers. It's very hard to find out exactly. And at the beginning of the year, it was a lot less. So they are building lots and lots of dApps, which is good. Now, Sui, this is one of the ETH killers we spoke about in a previous video. But you can see here, Mistin Labs, which is Sui, and this is from the Defiant magazine, by the way. The developer of the Sui Layer 1 blockchain has raised $300 million in a Series B funding that values the company in excess of $2 billion. And the round was led by FTX Ventures with participation from Binance Labs, Coinbase Ventures, A16Z, Jump Crypto, Circle, you name it, all the prominent VC heavyweights. Love them or hate them, these are the people that are jumping in. And the valuations are higher than they've ever been for layer ones at this stage of the game. It is crazy. And I'll talk more about the importance of looking at those valuations in a minute too. In other words, news as well, Aptos raised $350 million overall. They landed $150 million and then $200 million, which is another big one. And note the funders, I should say, FTX again. Interesting. So I did do a video. I'll put a link here after this video. But Solana Killers, Sui, and Aptos, everybody's looking at them. And per people like Sam Bankman-Fried, he's placing his bets on the future, as he says. Now, this is also per the Defiant magazine. They said there is now very stiff layer 1 competition, and they mention only 3 names. They mention Solana and Solana faces stiff competition from Sui and Aptos. And Aptos faces stiff competition from Sui and Solana, etc. All the names are kind of funny. They should have called it Saptos, so we could just say Solana, Saptos, and Sui. But anyway, we'll see exactly what happens. We did a detailed video on how we believe these SOL killers are coming up, but now the Defiant magazine is looking at them as being kind of the lead players in layer ones as we go forward. So it'll be interesting to see. Now, there is a little bit of bad news, as we knew, with all this competition and people scrambling for developers. Aptos is actually poaching some Solana staff, and I think it was summertime. Anatoly, the CEO of Solana Labs, praised the design, technology, and the software language Move, which you spoke about too, also saying it's more of a secure way to build smart contracts. And interestingly, Solana implemented the Move virtual machine back in 2019 when Libra project was still in active development. A little bit of ancient history going back 3 years. But more recently, Solana lost key personnel to Aptos, and his name is Austin Wirtz. So again, there's going to be a lot of that inter-chain poaching, and of course, with all the money, people flow to the money, big allocations of tokens, etc. So it's just human nature. Now, let's talk about this, though. This is the important thing to consider. As we go forward, everybody says, where can I buy these things? Well, they're not available yet. Aptos and Sui are not available yet. But looking at these valuations north of $2 billion, when you compare them to the market caps of Solana today, 13 billion, with all the activity they have on the chain, it's only worth 13 billion, which I think is a bit ridiculous. Ethereum, 212 billion, MATIC, 8 billion. Imagine these guys come to market and they do grow in a year or so and become an $8 billion market cap. That only gives you a 4x or less from where it is today. And by the time it does launch, it'll probably be a lot higher. So be very careful when these things do come out. I don't have the exact calculus because I don't know what the ICO prices are, if they're going to be an ICO or how they're going to issue tokens with all the regulatory scrutiny. But there will not be the upside we had in the old days back in 2021 and 2020, the good old days. So watch for that. Don't get too excited about these new chains. And also, remember this guy, Sam Bankman-Fried? He's got his fingers in all three pots. Obviously, this guy wants to own everything that is crypto. Again, love him or hate him, he's making moves. And, richest person under 30 on Earth and self-made. So don't watch out for this guy. He knows his stuff. Now, switching gears to a little bit of macro news, because tomorrow is a very big day. Tuesday is the US CPI. This determines what this number is, will determine where the markets go tomorrow. Okay, I have my inklings from all my data, and I believe it could be very good. I believe it could be 8%. I believe inflation is dropping. We are way beyond peak inflation, I've been saying for months. And here we go. Wednesday, we get the UK CPI. I hope it's not too heavy for those guys over there across the pond. US PPI, some other stuff. Thursday is China home sales and some other Chinese data. And Friday is European CPI, as well as the University of Michigan consumer sentiment. All big numbers, all very meaningful. We'll be watching them carefully. Now, for tomorrow, ladies and gentlemen, the US inflation data is expected to show a CPI cooling to an 8% level. And we'll see exactly what happens. If it is lower than that, the markets will go ballistic. Meanwhile, traders almost fully expect another jumbo-sized Federal Reserve hike next week, following 2 75 basis point increases already, which we've spoken a lot about. And they are taking their cue from the central bank supporting that view. But my position is increasing beyond 100 basis points from where we are now will cause a lot of financial problems and destroy many markets. And I think the Fed is aware of that. So it'll be interesting to see what they do. They can go 75, no problem. It's already priced in. But after that, they don't have much more to go. So that's where we are. Now, there's a cool site as well, US Bond Indicators, or suggesting that investors are gaining confidence that this year's spike in inflationary pressures will be brought under control, and the cost of hedging high inflation is falling, while so-called break-even rates on Treasury inflation-protected securities, a proxy for where markets expect inflation to be, have also dropped. So everything is dropping, which is good. These are things we like to drop, by the way. If you don't like stock prices to drop and stuff, but inflation expectations dropping, very good news. Next, this is a cool big thank you as well to Sanjay for sharing with me. It's from Charlie Bolello. It is the yields on FDIC insured savings accounts. This is fun. Just to poke a little fun at what banks actually give you on your money. You got Bank of America and Chase and HSBC and Wells Fargo and Citibank. Most of them give you 0.01% on your money. People think, well, that's not very much. Well, imagine you have $1 million deposited at any of these banks, okay? $1 million. They will give you $100 a year back just for giving them your money that they charge 6.5% to lend out as a mortgage. Criminal or what? That's why I believe in DeFi. Anyhow, and the debasement will be well north of $100,000 a year. Cash is a dangerous thing to hold. Just to remind everybody, for those who are kind of waiting for the markets to tank and then swoop in and deploy, it's expensive to hold on to cash. It's also expensive to jump into a market at an all-time high too as well. So we'll see. Anyway, a little bit of real estate news. Bloomberg, maybe saw my real estate video last week, but the world's hottest housing markets are facing a painful reset. Their words were a little bit stronger than mine, but they shared a little bit of data from a few different places. And here you can see the property slump already hitting in key areas. Obviously, we keep on talking about interest rates and the importance of that, how it destroys markets and how it hits economies in such bad ways. But households with loans have to tighten their belts while rising mortgage payments discourage would-be buyers from entering the market, dragging property prices and development down. Now, according to this, you can see the yellow one that's still up is Toronto up there in Canada. That is not dropping yet. But looking at all the others, you got Sydney, Auckland, Stockholm, all tanking like rocks. Again, historic falls in prices. Some haven't fallen this far in 20, 30 years. So again, increasing interest rates hurt. And it was news to me today for our poor friends in Australia. All mortgage rates there are floating. You can't get a 30-year fixed rate at 3% or 2.75%. It's floating. So you are, beholden to what the government decides to do, the central bank decides to do. And final piece of news, everybody, smash the like if you like this content. We try to cover as much as we can in as little time as possible so as not to waste your time. But Ukraine is winning the war against Russia and what it means for the stock market. This is from Barron's. I think it's a little bit bullish to come out and say that, but they won a couple of key battles. A quick series of lightning strikes has the stock market feeling very optimistic that the end is close for the war in the Ukraine. But that would be another good one. Imagine CPI tanking and the war ending and the Fed pivoting. Wow. I'd really say seatbelts on, ladies and gentlemen. So with that, happy Monday. Thank you all for being here. Thank you to the moderators in the chat. Thank you everybody for the likes. Appreciate you all. And I'll see you all tomorrow for a loaded 30 to 50 charts of data. TA Tuesday, on-chain TA, whatever you want to call it. It's going to be a banger of a show. Thanks all. Bye.